Welcome, ladies, gentlemen. This is my first video. I'm gonna keep the introduction short because I'm not kind of a showboat kind of person. This is Stocks for Noobs, people like me and you. I'm not a professional, so please take what I say with a grain of salt. Do your own research. The very first thing I can probably tell you and probably teach you, if I can teach you anything, really, is listen to what other people say, take it in, do your own research though. That's tip key number one, honestly, and that's just a survival tactic, just in life in general. But this channel's aim is to basically just catalog my journey, my thoughts, my overall ideas about what's going on in the economy, the stock market in specific, and also I'll let you guys know what's going on with some of the stocks that I invest in. Actually, one of the ones that we'll be talking about today is going to be Boeing, which we'll get to at the later part of this video, because I feel like right now is probably the biggest time to really sit back and talk to you guys about what's going on with the market. As you can see, I have up right now, it says the first record stock market crash. Really what I'm trying to get to today is to provide some kind of comfort in whatever aspect that is, really. I know that there's a lot going on around social media. There's a lot going on around in the news about this and that, and if you guys are investing in the stock market, then you don't even have to see what's going on in the news to understand that there's something going on in the world in general. This is a global economic crisis that we are dealing with right now, and I know there's a lot of fire words out there and craze words like, oh, this is the biggest thing ever, we've never seen something of this nature, and there's a lot of truth to it, but at the same time you just gotta take a deep breath, relax, just chill, and just know that, hey, look, yeah, we are going to be going through some very difficult times, and I don't know how long that will be. I don't think anyone will. But this isn't the first time that we've ever been through something like this as a country or as a world. And so I kind of just want to ease your mind and take you down memory lane, I guess, for a lack of a better phrase, and just kind of show you, if you guys have never actually done anything research wise, what has happened in the past. Compare what we're doing now to what has happened, and that will shed a lot of light on the situation, and it'll also give you a lot of clarity, because I know from me personally, with me being a newer investor, I mean, I've been investing for about roughly 3 years now, so I have seen some things, not really though, nothing of this nature, anything nowhere near this magnitude. I'm still very new and I'm still learning, but I've done a lot of research, and I am very comfortable and very confident in my investing tactics and my investing strategies, and they have yielded me, even in these times, believe it or not, they have yielded me actual results. And I really just want to show you guys that, listen, there's nothing to be afraid of, and we're going to start with this. I mean, the very first thing on this, it's from thestreet.com if you guys want to go to the source. Scroll down, and the very first thing you guys are going to see are the 4 US stock market crashes. Okay, and the first one it's going to start with, the stock market crash of 1929. This was, as it states, the very first U.S. stock market crash. It occurred in 1929 on October. This was really the very first biggest stock market crash. It was very significant during this time. It was actually, I believe, one of the biggest crashes we've actually experienced. I'm not going to go into too much detail with these because there's a lot that goes into everything. There's a lot of micro sectors that go into what causes a crash. A crash is a lot of different things, or sometimes a couple big things that happen all at the same time and they just fail. They just collapse. So there's a lot of components that go into these crashes, but there's an overlining or an underlining theme to these. That's what I want you to take away. And in this particular one, the very, very villain himself has actually shown himself, which is what we want to always stay away from in the stock market world. It's margin. This is called over leveraging or high leverage. Whenever you hear that word, that means someone has taken out debt. That's basically saying if you want to buy, let's say, stock A for $20 and you don't have $20 and someone says, I will loan you $20 at X% interest rate, that's margin, that's leverage, that's debt. That's what people do on a day-to-day basis. And that right there is the takeaway theme to every crash and almost to just about everything bad that happens in the market. Over leverage is just brutal. So take it very serious. Stay away from it. Definitely tip number 2, I guess, if I could teach you something else. Don't do margin. Stay away from debt. Invest with the money that you can invest with. And be smart with it. The stock market in 1929. Very simple, very flat out. People over leveraged themselves because this was when automobiles was taking a big boom, housings was taking a big boom, everyone was on the up and up, and then boom, gone. So everyone took out high leverage. Everyone got over excited about all these new stock potentials and how much money they were making. Eventually, it can only go so high. Everything has to come down. And when that happens, all that leverage, all that margin, all that debt you've accumulated, they want to now collect on that money. And when you don't got it, well, that's what happens. So 1929 in a nutshell. Boom. The stock market crash of 1987. Man, what can I say? They call this the Black Monday the 2nd. I don't know. Biggest takeaway again, high leverage. Borrowers. But I guess an important underlining theme for this one too is bubbles. Okay, so this was kind of the craze or the beginning phases of technology. So there was a huge crave for, as you can see, Apple, Cisco, Microsoft. These are still very well-known names. Apple, Microsoft being two of the biggest companies in the entire world. These companies, when they were first starting to take off, could you imagine? Wow. First starting to take off, the excitement that they built up over time. Just like in 1929, the excitement was too much. People over-leveraged themselves. And just like humans, as greedy as we are, we take, and we don't think about the future, and then boom, pop, collapse. That kind of steamrolled into number 3, the dot-com bubble. Everyone's pretty familiar with this one, 1999 to 2000. The dot-com bubble. It's basically the same thing. I mean, you had the tech sector, the technology sector of the market, which basically is just comprised of everything technology that you can think of. So Apple, Microsoft, Google, I mean, even Tesla's in there. I mean, just about anyone that can make technologies categorized under this, and the craze for that was insane. There was also, you know, the Y2K rumor. Now, like I said, there's a lot that kind of goes into these things, so I'm not going to get into the uber specifics of it. But again, everything comes down to over leverage. Everything comes down to overinflation. That's what this whole thing is about. It progresses into the next thing. Number 4, the Great Recession. Everyone knows this one, the 2008 housing market crash. We over leveraged the market. The sector specifically for this one was the housing sector. Just another section or sector of the overall market. But man, did we take advantage of this one. Now again, there were other sectors like the banking sector. Like I said, there are multiple sectors that make up the overall recession or overall crash. Okay, it's usually not just one sector, but there's usually one major one. In this particular one, it was the housing market. The banking sector was another big one too. But I mean, these are 4 times in the U.S. history, just 4, and there are so many more in the U.S. history where the stock market took huge crashes like we are experiencing today. Today, yeah, we've pretty much overlapped a couple of these. I think actually the 1929 one and today is maybe possibly one of the 2 biggest ones. However, when it comes to percentage loss, okay. However, a crash at the end of the day is a crash, and it creates panic, frenzy, and overall what it does for new traders like us is it creates uncertainty. It creates a sense of doubt, fear. God, the feeling in your stomach when your stocks are taking a 20% hit or a 30% hit or more is, I can tell you, it hurts. However, I can also tell you that as you gain more knowledge through this, you will actually put your mind at ease, and it's not even a big deal at the end of the day. So I know I rambled on there for quite a while. Sorry about that. So this video is going to take a little bit longer than I thought because, like an idiot, in the beginning I did tell you that I would go over a company, in this case Boeing, so that it's going to take a little bit of time because I do kind of want to show you a little bit of how I view these companies on like a back of the napkin type situation. Like if someone was to say, boom, how's this stock doing, I would say, okay, I need these numbers and I can give you a gist of what they're doing. So in that case, Boeing. So we're going to switch over. What you're going to really want to do is you're going to want to basically just go, if you ever really want to find out what companies' earnings are, what their financial reports are, how they're doing, you're going to want to specifically look for their 10K and their 10Q reports. The 10K and the 10Q reports are going to tell you what their quarterly their quarterly reports are, which is the 10Q. And then their annual financial statements. So their 10K will be their annual financial statements. So go on to their website, Boeing. You can type in Boeing 10K and it'll bring you basically straight to this. And then you go down and you go to annual reports. These are my favorite. I kind of like only really looking at the 10Ks. The 10Qs are okay for if I really want to get into the financials of a company that I'm not too particular about or too sure about, like if I really don't understand them. But usually the 10K reports is really all you need, because it's going to give you the overall financial statement of what they did for that entire year, and they even go back, 2-3 years. So if you're going into the 2019, it'll usually show you, comparison numbers from 2018 and 2017, so you kind of get a 3-for-1 deal, really. So anyways, you click on that, and it's going to bring you straight to this page. Once you get to this long, crazy document, it is going to be crazy overwhelming, and I understand that. But you know what? You really don't need to know any of this, really. You just need to know the numbers. So let's get to those. So scrolling to the financial page, you're gonna see this. Really what we're looking for on a back of the napkin type of situation for a company is we're just looking for a couple different areas to look at, okay? The very first one I really want to know about is how are their assets. I want to know their total assets. Their assets is what do they own, cash, everything, inventory. It's basically their entire operation. This is going to really tell me a lot about how safe the company is when I start comparing this number to their liability or their debt. So they're going to have liabilities, and then they're going to have long-term debt. So liabilities can be anything like accounts payable, like you see here, accrued liabilities, things like that. I mean, there's a lot of different nuances that go into this. They do break all this stuff down. I really honestly just care about the overall numbers themselves. So we're going to focus on this. Total assets. As you can see, the total assets for this is $133,625. Now, this is in millions, so that is actually $133 billion, but we're just going to use the shorthand abbreviated version of 133,625,000. Okay, it's a good sized number. Obviously, we are talking about Boeing here. Okay, this is the biggest airplane supply company, and they even have contracts with the government for fighter jets. I mean, this is a very, very diverse company when it comes to airplanes. They supply a lot. The 737 Maxes that are having problems, those are huge. When they actually get those back up and running, this company is going to start flourishing a lot more than what you guys are seeing right now, which is why I'm focusing on this company, because if you look at it, it has gone through some troubling times, and the troubling times are short term in nature. I'm a long-term investor, so what we really want to focus on here is the long-term game. Okay, are their fundamentals hurting? In this case, I'm not seeing that. Their total assets, 133,625. We're comparing that now to the total liabilities. Okay, how much does it really cost to basically, pay out what your employees, etc., etc. Short-term debts is also counted here. Now they have 97,312. What I also like to take into account, excuse me, are long-term debts. Long-term debt is not really into this bigger number right here. However, long-term debt is still a number that I like to take into consideration. So if you add those two numbers up, we are still coming out even when it comes to our assets over our liabilities, which is a beautiful, beautiful thing. Okay. Now the next thing we're going to roll over to is their debt and their debt ratio, which is going to be very important. So let's scroll over to that. So scrolling over to this page here, we can see now not every company is going to have the same exact layout. They are going to have the three main lines that we want: your assets, your liabilities, operations and revenues, and things like that. They are always going to have those numbers, but little tiny nuances like this debt to equity ratio and things like that, not every single company always has things like that. So if they have them, take a look at them and stuff. They're just good information to have. But you can see their debt to ratio, or their debt to equity ratio, is very, very, very good. It's actually a pretty safe company. So in times of panic, in recession such as this, I mean, this is a company that is still solid. This is a fairly safe company. If you look at their cash and their cash equivalents that they just have on hand, they have 9,571. Now remember, that's in millions, so that's actually $9.5 billion. So they just have that lying around in cash. So this is not a company that is going to be going out of business or bankrupt or anything crazy of that nature. I mean, unless something absolutely extraordinary happens, because I mean, the impossible is always possible. But in this case, I'm fairly confident that this company is going to be very, very safe. They have very good assets. Just looking at that, they have very good liabilities. That's not over their assets. That's important. Their assets are over their liabilities. So if worst case scenario happens, they can sell all their planes. They can sell everything, pay off the shareholders and everything else, and they'll still come out and they'll be okay. They don't have to go out of bank. They're not going to file bankruptcy or anything else of that nature. They got enough to cover themselves. Plus, they have cash on hand. So like I said, I can't go too much more into this because these videos can't go too long. I didn't realize how long I can babble on for. So this is, like I said, kind of the back of the napkin kind of thing. 10Ks and 10Qs are going to be your friends. If you guys are ever interested in a company, just type in that company name and type in 10K or 10Q, and it'll take you right to their financing page. And just take a look at it. Go through it. Don't be overwhelmed with it. Really, you're just looking for whole concrete numbers. How much are their assets? How much are their liabilities? Think about it when it comes in terms to your house. How much money do you got? How much stuff can you sell if times are hurting to come up with some cash? And then how much debt do you have? Or how much do you owe? You know, if you are bringing in some a lot of money and your debt's really low, well, you're a healthy business and you're a healthy person financially. So it's the same concept. It's just on a larger scale. So don't get overwhelmed, and in times like this, don't panic. So I hope maybe, I don't know, you guys learned something, and stick around, and I'll definitely go into more depth with these financing reports, and I'll go into a lot more about the companies that I own. So thanks for tuning in, and check you later. Hey, if you guys actually stayed for the rest of the video, thanks. This is my first video I've ever made. Never done this before, so I was a little bit nervous. So, you know, leave me some feedbacks and comments. Be mean. I don't know. I'm just kidding. No. Hopefully this helped. If you guys liked it, you know, subscribe, follow, like, whatever those things are. Any support helps. Really does go a long way. Thanks, guys.